And in business-related news, the US dollar is surging as investors rushed towards safety amid escalating tensions in the Gulf. In fact, oil prices briefly surged close to $120 billion per barrel, and this as fears grew that the conflict could severely disrupt global energy supplies. The spike in crude triggered broad risk aversion across financial markets, sending stocks, bonds, and precious metal lower as investors moved to cash. Currency markets reflected the shift in sentiment. The greenback also strengthened against several Asian currencies, which included the Japanese yen and the South Korean won. The market turmoil comes as a conflict threatens one of the world's most critical energy choke points, which is the Strait of Hormuz. In fact, Iran has targeted shipping and energy infrastructure in the entire region, disrupting flows through a route that carries a significant share of global crude and natural gas supplies. And it is even estimated that roughly one-fifth of global energy supplies have already been affected. Concerns, meanwhile, have been mounting that a prolonged conflict could push oil prices even higher, with some Gulf energy officials warning that exports from the region could halt within weeks if the situation worsens. Also, higher energy prices are widely seen as a major risk to global growth, acting like a tax on economies and intensifying inflation pressures across the globe. The surge in oil prices is also complicating the outlook for central banks, particularly the US Federal Reserve. While weaker US jobs data had briefly raised expectations for interest rate cuts, the inflationary impact of high energy prices could very much delay policy easing too. The developments have also revived debate around the Petro-dollar system, the long-standing arrangement under which most global oil trade is conducted in US dollars. Established in the 1970s following an agreement between the United States and Saudi Arabia, the system has reinforced global demand for the dollar and helped cement its role as a dominant reserve currency. Although some countries have explored trading oil in alternative currencies, the dollar still accounts for the vast majority of global energy transactions.